We've got a bit of a debate around Alphabet/Google. Is it a buy, sell, or a hold?
It reminds me a little bit of the moment we had with Meta a couple of years ago. The fact that they're a world-class company kind of and so deeply embedded in everything already.
The very peak of the valuation, you were like, this is BS. This is overvalued.
It's almost like I want to say this is Google's to lose and they would have to fumble it.
The zeitgeist right now, like the Wall Street bets crowd, like they go crazy over stocks like this.
And what's great about Astera Labs is that they serve products across both dimensions, basically making all of AI their TAM, really.
So if we go back into boom time, like everything's going to go up, whether it's a real co or a shit co.
We can't sit here with a straight face and say that AI soon, is there's going to be a hiccup there. So
for an advertising-free version of the show, check out patreon.com/Wall Street Wildlife. Hello and welcome to Wall Street Wildlife with Krzysztof and Luke. On this week's episode, is the end in sight for tariffs? Plus, we'll be looking at the Chainlink Build Rewards program and what that means for owners. I'm going to check out Mercado Libre's latest quarterly results, and we're going to revisit Krzysztof's short on Quantum Computing Inc. How's that playing out? Plus, we've got a bit of a debate around Alphabet/Google. Is it a buy, sell, or a hold? And Krzysztof is going to take us on safari with a picks and shovels play in the data center arms race. Action-packed episode as ever. Stick around for some great insights.
Mio caro Baggero, la tua bellezza è mozzafiata, eh?
Your motorcycle is broken? What are you telling me?
Badger,
you're so pizza? You ran out of cheese for your pizza?
It's so good to see you and to be on the same side of the pond as you, this time for 3 months. Ciao from Sicily, Italy, where I'm back.
Ciao.
Happy to leave the good old US of A behind me. Pop quiz for you. Do you know what the expected temperatures in Austin on Wednesday are going to be?
Like 40 centigrade, maybe?
41 centigrade. That's 105 for you Fahrenheit keepers, and that is in early May. I'm pretty sure that's going to be a record of some kind. Doesn't bode well for the summer for the poor Austinites. So, man, am I glad to have gotten out of there. Here in Sicily, it's about 70 degrees today. Just delicioso.
Beautiful. Very nice.
Yes.
It's like even walking in like the vineyards and picking olives and things here this morning.
Yeah, smelling flowers, eating capers, swimming in olive oil, all of the things. You know what? You know what else I've done? I have used my Wise card with impeccable flawlessness from just, withdrawing money from the ATM with zero fees and then using it as a debit card. And I just can't. I'm just so happy with your company, Wise. So I hope your investment does well. They sure are helping me out. Just so
definitely a core investment for me. And one of my buddies was coming in from Canada. I saw him yesterday, and he's on his way. He went to Athens yesterday, and then I saw his Wise card at some point. Like, he's also a fan. It's awesome company. I love to see it in the hands of like Canadians and people like that.
Yeah, I mean, I was just surprised. It's just works so flawlessly, seamlessly, kind of like a magic fix almost for international travel. So if you are one of these cross-border travelers like yours truly, and you don't have a Wise account or you don't have a card, check it out. Last, maybe most obvious point. I could keep my money in a checking account at Wells Fargo, or I could put it over in Wise. Checking account gets 0 APY. Wise gets 3.9% at the moment, plus all of the feeless stuff. So it's like free money. It's kind of like free money. It's just a no-brainer.
Yeah. And I guess like not to keep like harping on about that company, but like I guess you're spending euros for the next month or two. Like you're earning interest on your euros at a pretty decent rate if you turn on the interest product. So yeah, go do that.
Yeah. Amen.
Let me scratch my head and think, Like, when was the last time one of Krzysztof's companies helped my life? I don't know. I ain't using quantum computers. I haven't got satellite phones yet. I haven't got like an EOS battery parked on my driveway.
Well, whose problem is that?
Do something for me, Krzysztof. I want to be a customer of your companies.
Look yourself in the mirror, Badger, and ask yourself why you don't have an EOS cube parked outside in your driveway. So so anyway, I'm delighted to be here in Europe. The pace of life is just so much, quieter and slower, way more my speed. Living in the side of the mountain now, though, I already re-injured my hamstring, so that's not great.
Have you found a wild swimming spot? I know you're a fan of like getting naked in the forests.
Like a forest nymph. Yes, I am a fan of being naked in the forests, but I have not found a wild swimming spot. It's
Alrighty.
yeah, but I'll send photos as soon as I do.
Yeah, maybe censored. Yeah.
Okay,
Don't want to see too much monkey paraphernalia.
Badger, what's happening on your side of the pond since I last spoke to you?
I'm still like 10 days into my like nutrition science experiment. So I've got lots of interesting data. I like Gemini. I said I've been logging like everything I eat and exercise and do in Gemini. And I've had this one conversation running for coming up 2 weeks. It's getting pretty freaking preachy now.
Uh-oh.
Like I've just had a boozy weekend away, and we ate like a lot of food. Like we did some Texas barbecue thing, and then we had like a barbecue hit the guy's house and some other, like it was like a meat fest. And like I got soundly lectured by Gemini whenever I updated it on my food intake. I think the nicest thing it had to say was, "Well, at least you're hitting your protein goals, Luke." I could see it, like I could hear it rolling its eyes. So, yeah, I'm getting taken down by AI.
I don't know for our YouTube viewers, if you see my shirt, it's my Alec Baldwin, Glengarry Glen Ross Coffee is for Closers shirt, in which speech he says something like, "Badger, put that donut down."
I've just, I'm watching Succession, and I've just seen the episode where like revolt is about to happen, and then like a box of donuts arrives, and then like chaos ensues. So I'm deep into series 3 now.
Oh, fantastic. Which reminded me, I don't know if this is projecting or deflecting or whatever psychoanalytic tool, but I sometimes feel like when you look at me, you see Cousin Greg. But just you wait. Just you wait.
Yeah. You're going to come good. Okay. I definitely don't see Cousin Greg in you. You're a bit more Roman, as far as I'm concerned.
Fair.
No spoilers, though.
Right.
I don't want to know.
No.
I hope Greg comes good, but like, yeah, don't spoil it for me.
No, we know Cousin Greg can't do no wrong. All right, so what in the goodness gracious is going on with the tariffs?
Yeah, like it's all over. We're back to normal, kind of. So, I literally no idea what's going on. So we're recording on Monday, the 12th of May, and over the weekend, I think we've just seen an announcement that like the US and China have come to some preliminary agreement and to slash tariffs for the next 3 months while they negotiate some of the finer points. And the finer points are still some pretty big material things. So we could kind of go anywhere from here. But I think from Wednesday this week, both sides are going to cut tariffs by over 100%. So we're going to essentially come back to pretty close to where we started, which is US tariffs on China imports falling to 30% and Chinese tariffs on US goods falling to 10%. That's a much bigger cut than probably anybody expected, given the magnitude of where we started. So interesting. I mean, we had the US UK trade deal, which actually I think was pretty reasonable in the round. I mean, it should have been a straightforward one because the US has a trade surplus with the UK and we're partners and blah, blah, blah. But that kind of came out pretty cleanly. And like, I'm pretty happy with how things worked out, but quite surprised to see what could have been one of the most acrimonious aspects of the negotiation, US-China, and actually seems to have landed in a relatively sensible place. And who knows if this will hold, but if it does, it's probably going to, well, almost certainly will unblock like supply lines and logistics and that sort of stuff, like shipping, something I've been bleating about for the last couple of episodes. So, like, maybe doom is averted.
Maybe doom is averted. That should be our headline. I'm so frustrated with the, I don't know, I don't know what better moniker to call it, mainstream media or news media, because everything is so partisan that I find I can't trust or feel like I can't even, yeah, trust. Is it? It's not just trust, but I can't even take seriously any analysis that is not so fully partisan. Because even if, let's say, Trump did some good and actually did, say, negotiate with the kind of, using his style and he got results, I just can't believe that it would be reported relatively objectively by many news sources that I'm used to reading. And so I can't, question mark that you're talking about, has some good come out of this? Seems like it's possible, right? It seems legitimately possible. And yet, would you bet? Would you, like, are we past the point of uncertainty? No, I don't know. Do you know? You don't know, right? And so it still feels like business is unfinished. And I don't know. Where are you? Maybe that's me stumbling to asking you, what sources are you relying on to make you feel like you can come to some conclusion about this that's stable?
Yeah, like I suppose the primary source of this is like Trump on Truth Social, but I can't bring myself to install that. So I get most of my news from X. I'm also using like Gemini with deep research quite a lot. And I think deep research is quite a useful tool. Like it goes out and if you ask it, say, give me an update on what's happening with tariffs in the last 48 hours, it goes and surfs the web for you and looks at like hundreds of websites. But the most useful thing is it gives you some analysis, which is really structured, but you get all the citations. So if you want to fact check what it's telling you, like it's really easy to do that. And if it's something important, like I go and check the citations and make sure like I'm getting at least like straightforward reporting, not hallucinations. But kind of who knows, like the way the US administration have played this could have been artful, but like it does feel like they're sort of making up as they go along a little bit. Like how does this serve? Say let's say we end here and all these finer points get negotiated and we finish on like 30% tariffs on inbound Chinese goods. Does that really create a strong incentive for domestic manufacturing, which was supposed to be the reason for all of this? I don't think so. So like it would be net cheaper still for Apple to manufacture its iPhones overseas. Well, they're doing it in India, not China now, but it's a bad example. But XYZ other company to manufacture in China, add on the 30% tariff to land the goods into the US and sell them. Probably cheaper and more efficient to do that than it would be to set up like a whole manufacturing plant and onshore like a whole load of stuff. So I don't know that this serves like the supposed ultimate goal.
My understanding was Trump wanted some, well, he uses the word fairness because we're always being ripped off, and maybe some, I mean, maybe there's some truth to the extent that it was way over misaligned, and even a little bit more toward the middle seems, if it's still a global economy, then the whole
Yep.
system stabilizes a little bit.
Yeah.
I'm no expert, so I can't speak to that for sure. But anytime, so that could be a good, because then that trust quotient will be resolved. That the United States doesn't feel like it's being bullied. That means it'll be more open towards the supporting, I guess, not being taken advantage of, but also welcoming its partners into its fold. So that's kind of how I understand it. Like, are things stable? Did this move get rid of the jagged edges and kind of smooth out the surfaces?
Yeah, I think that's the key term, stability and like predictability as well. Because like even if the US said, okay, like 100%, 200% tariffs, like, but that is here to stay, that's still stability. Like businesses can then strategize around that. It's just when you like things are going up and down every day and you don't know where you're going to end up, like you can't plan in that environment.
Right. And to backtrack to the news source, if if LLMs like Gemini are just sort of scanning the web and I guess, I don't know, doing what neural networks do, but if the data themselves are so polarized, I know the answer isn't just take the average of extremes. Then how does something like Gemini come to what we would call an objective conclusion if the data sets themselves are extreme?
Well, I mean, when I try and frame questions where I deliberately ask, we're turning it into like an AI conversation, I suppose, but that's like it's our nature. Like I try and frame questions that deliberately instruct the LLM, go and seek like counter sources of information, apply some critical thinking, like give me both sides of the argument, and I'll try and judge for myself. Ultimately, I'm just gonna probably this sort of data like rely on reputable news sources.
Right, see that, but right. I think that's maybe my point of open confusion is if I ahead of time know that the dominant data source, and this is maybe where it's an overextended assumption, that the data sets on both sides are overly exaggerated, then even if I say, look at both sides or give me counter arguments, then I'm asking the AI agent to say, go from one extreme and then look at the other extreme. But if they're both polarized extremes, that's
Sure.
still sort of not exactly the middle, and averaging them isn't exactly objective truth. So it's a weirder moment that I'm intuiting frustration about, even with skillful use of AI tools.
Yeah, fair enough. Fair enough. Probably this like the specifics. Like if I say look, if I look at say the UK US trade deal, and I watched like Trump's speech in full and Keir Starmer's speech in full. So I suppose that's like the source of truth, but there was no detail in there. It was kind of hand wavy and hoorah, 80 years from VE Day, and like look at this like centenary kind of like major milestone and we've achieved all this stuff. But you try and get into the detail, there's no detail there at all. It's probably still being thrashed out. Like probably both negotiating teams were just told, like, get something that we can announce today. Like today is the day. So, so yeah, what is the truth? Like, who knows? But at least that one, like, well, I suppose the main takeaway is like like the world is navigating this chaos quickly, and that's probably the best we could ask for. Like just get through this, get to some kind of resolution and some stability as quickly as you can. So I think they're doing a good job of that.
Yeah, I'm all for that. I mean, the market today, as we're recording, likes what it saw. So fingers crossed.
Yeah, like I look at my I don't want to drag this segment out because I've got so much else to talk about, but I look at my own like 20, 21, 22% cash position, and I'm like, well, maybe if we are coming out of like suddenly the last 24 hours coming out of like doom and tariffs and fear, like a lot of my bearishness of the last couple of months has been predicated around tariff chaos, volatility. We're going to speed run into a recession and then like massive unemployment and like we're going to go to shit. Maybe that's all moot now. I don't know. So I'm going to take a breath and probably not try not to do anything for a couple of weeks just to see if some of this stuff sticks and see if the next couple of agreements that get announced are similarly reasonable. But if they are, I need to get that money reinvested.
Right. So 2 points on that. One, I still believe your theory that there is going to be that kind of temporary sticker price shock that's delayed. That might freak people out. So there might be a couple, down waves. But then the market is always forward looking. So if we know that those knots have been untangled, then the market might actually not react as poorly temporarily. So I'm thinking more like 2, 3 months
Yeah,
before we could kind of say, okay, coast is clear ish, rather than a few
yeah,
weeks.
I agree. I think a sort of a few weeks where I'll force myself to do nothing just to see which way the wind continues to blow. But you're right. Like, it'd be good to see like another quarter of earnings from my main, like the companies I'm mostly invested in, because we just had earnings season. We're still in the middle of it to some extent. And we're not seeing like the tariff and the chaos impact yet, because this is data up to March. So probably the quarter that these companies are living now is a mess. But maybe the news of the last 48 hours might mean like the following quarter is better. So
Yeah.
yeah.
Oh. To be determined. Yeah.
Anyway, you probably, if you're listening, we probably taught you nothing there because we haven't got a freaking clue what's going on, just like you guys.
Wall Street Wildlife is brought to you by the Chit Chat Stocks podcast. My name is Ryan.
And my name is Brett.
And we're the hosts of the show.
On Chit Chat Stocks, we are constantly researching new stocks from high flyers to undiscovered small caps, diving deep into business models, debating competitive advantages, dissecting valuations, and we have a fun time while doing it.
Supercharge your investing research and start listening to the podcast today. You can follow the Chit Chat Stocks podcast on YouTube, Spotify, or Apple Podcasts. Follow the show so you never miss an episode. That is the Chit Chat Stocks podcast.
Let's talk about something we do understand, though. Krzysztof, do you want to take us on and tell us about the bleeding edge of crypto tech?
Yeah, I'm really excited about what I'm about to tell you. And I know I'm talking to my forever crypto skeptic, but here's why I'm excited, because I feel like I got a chance to experience something that is non-circusy in the crypto world, even though it also felt somewhat circusy. So let me give you the specifics. And this is purely educational because this is how the future is still unfolding. So most people were not, did not have access to the stuff that I did, but you will in the future. So in the stock world, we have dividends, right? Where you own a stock and you get a bonus payment coming from out of the company's, call it treasury. In the crypto world, there's something called airdrops and token deliveries, where basically supporters of the project get incentivized to buy it, and then the company kind of gives them free stuff, free tokens, which then kind of enables the casino-like nature of many, many projects, right? Well, as a Chainlink holder, I received my first airdrop of tokens this weekend. Now, how I was able to do this is the part where I was one of the few early ones that were able to stake my Link tokens, and there's only a limited window when that possibility was open, and the pool was full, and so most people simply do not have access to this, or did not have access to this, and currently don't have access to this staking thing. But in the future, as Chainlink evolves, those staking pools will open. So this is more, me trying to inform people about what will be available in the future. So because I had staked my Chainlink tokens, which means I put them up as collateral to make sure that the system runs cleanly. And that's kind of one of it's sort of like what's the best analogy? You want the crypto world is all about making sure that the numbers that are in front of you are actually true, so that they're transparent. And if they're transparent, how do you make them transparent, rather? Well, you stake some collateral so that when a bad actor, call it lies or manipulates, they lose money. So everybody's economically incentivized to speak the truth. Anyhow, I staked my Chainlink tokens, and Chainlink built this program called Build Rewards so that the stakers would receive tokens from some of these projects at a certain date. And the first one went live this past weekend, meaning the rewards were called airdropped. I think that's the terminology. I pressed all the buttons, I followed all the directions, and in my account, in my Chainlink address, I received a not insubstantial amount of tokens seemingly coming out of the air, like a dividend coming into my account. These were they're called space and time tokens, SXT. So you can now look them up on any crypto exchange, and each one is worth 15 cents at the moment. They're tradable. So unlike dividends, which are it's just cash, these are tradable. But at the moment, they're worth about 14 cents. And so that's an equivalent for me of about $1,500.
Yeah, cool.
Kind of seemingly out of nowhere. Now, this particular project, I won't go on and on about it. They're partnered with Microsoft. It's a way for data sets themselves to be verified on chain. We'll put a link in the show notes to the white paper. And there's a YouTube video that's actually quite decent in explaining that particular project. But really, sorry for rambling. The real reason I want to talk to you about this is because, to me, and I don't know how this sounds to you, the main fork in the road is it circus or is it legit? And I've always maintained that Chainlink is a purely, thoroughly, no bullshit, completely legit program or protocol or a project or group of developers, however you want to think of them. And the fact that I now received a not unsubstantial amount of actual money coming in, meaning like value, right? Backed by a project that itself is backed by Microsoft. I mean, verifying databases and that this is where the world is going in terms of, building the finance on top of blockchains. It's like this first taste of the economic opportunity here that doesn't involve the gambling stuff. I did nothing that was gambling-ish, right? I just followed the directions, and all of a sudden I got rewarded as a owner or as an investor or as an early token, investor in the project. So that felt really satisfying. Now, some of our listeners might be sitting there saying, okay, that's great for you, Monkey. You were one of these early bleeding edge cases, but it wasn't open to me. Sure. However, Chainlink currently is supporting over 100 of these build projects. This was just the first one to have coughed up the fruit. So in the future, in the coming months and years, I believe, they're going to, as the public starts getting informed about it and we cross past that chasm of bleeding edge stuff, then anybody that has the tokens will be able to more readily follow the steps and also set themselves up for these kinds of drops. So just putting it on the map for y'all.
Yeah, very good. I like your sort of like using the metaphor of it's like a dividend. You're right. That's a kind of cool way of thinking about it, getting paid to be an owner essentially of that thing.
Yeah. And it's actually, I'll say, let me develop this thought just a little bit more. The space and time development team were incentivized themselves to use Chainlink. Chainlink has a suite of services. Everything's about security and transparency. So they're like, we want Chainlink services. Okay. But in order to use them, or like the negotiating, sweet middle ground was, okay, you're going to have to cough up 4% of your tokens to our user base. And it's this kind of symbiotic relationship. So now the space and time people donate whatever, 4% of their tokens to Chainlink. But what they get is, a better product. So it's kind of, that's what we were talking about when you remember the whole sort of impetus for how are networked, decentralized things going to compete with the large corporations like Google and Apple. Well, there is this feeling of people working together, incentivizing all of the owners rather than just the sort of, creme de la creme. And this is one of these proof points, which feels satisfying.
Good stuff. Well done.
Thank you.
All right. I didn't get in early, but shall I tell you about where we're at with Mercado Libre? It's one of my biggest holdings.
Yes, please.
Let's do it. And I was prompted to go into this one a little bit because if you caught a few weeks ago episode, Katrina and I visited an Amazon fulfillment center, saw the robots doing their robot-y stuff. So I thought it'd be worth just touching on not just Mercado Libre, but also C Limited. And kind of arguably, these are similar kind of companies serving different parts of the world. So Mercado Libre's main markets are Brazil, Mexico, Argentina, and like a bunch of other Latin America. And C Limited is like Southeast Asia. Funnily enough, also has a major logistics and e-commerce arm in Brazil. So they kind of, they do battle in Brazil as competitors. So Mercado Libre put in like rock solid results. I thought it might be nice to go check out finchat.io. Yeah, so Mercado Libre and C Limited. Mercado Libre on screen is in blue, C Limited is in orange. So they're sort of broadly similar market cap today. Mercado Libre is a $124 billion company. C Limited is an $82 billion company. And they have similar-ish revenues. So latest quarter reporting from Mercado Libre, we haven't seen the matching numbers from C Limited yet, $5.9 billion in revenues. And you can see there, like Mercado Libre's always kind of led the way, but they're kind of running in lockstep. And then on a net income basis, which is like the real profit after you've paid for everything else and depreciation, amortization, everything else. So they're both healthy net income generating companies. And this is particularly pleasing to me for C Limited because I kind of bottomed ticked this one when I recommended it for 7 Investing a couple of years ago and also added it to or topped it up in my own portfolio, getting in just as the company was starting to pivot back to profitable growth. So again, C Limited are trailing Mercado Libre, which is generating nearly $500 million in net income positive in the latest quarter, but they're both profitable companies. And I mentioned that they kind of do battle in Brazil. So something really nice you can do with FinChat, and if you go check out finchat.io/wildlife, you'll get a handsome discount off of any paid plan. Well, FinChat pull out some segment data and a bunch of other like bespoke data from the reporting. So here I'm mapping Brazil revenues for Mercado Libre against Latin America revenues for C, which is essentially also Brazil. It's their main LATAM market. And you can see, blue line again, Mercado Libre is dominant in Brazil, but they're both still growing at a similar kind of rate. So probably that sort of demonstrates that the whole market for e-commerce is expanding, and really their competitors are like offline commerce as opposed to each other so much. So Mercado Libre versus C, I like both companies. They're both putting in solid results. I'm happy to be a long-term owner of both of these. One thing I had been grappling with Mercado Libre, and it has been a bit of a hangover on the stock for a little bit, is really crazy levels of inflation, essentially hyperinflation in Argentina, which is one of their bigger markets. I think Argentina today is about 25% of their revenues. And like it was wild. Annual inflation was triple digits, but it's come down to 55.9% as of March, like 2 months ago. So like 55% inflation is still insane, but at least it's sort of stabilizing and coming down. I think the market expects 22, 23% inflation by year end. So that'll be good just in terms of getting a bit of stability in that market.
All right, Badger, 2 questions for you regarding C Limited. I used to be an owner back in the day. Luckily, I sold at peak valuation. But one of the things I remember that was sort of confusing about the company was the way they were tying all these sort of like funnel products, gaming as a way to get people onto their platform. And it was like multiple arms. And it kind of felt, I don't know, for sure, to use your like somewhat casino-ish. versus Mercado's clean, focused operations, I suppose. Uh, can you update me on whether C Limited is still doing that kind of thing? And second question is, what the hell? How are they even succeeding even a little bit on Mercado's home turf?
Yeah, so Garena is the gaming division of C Limited, and they were really dependent on gaming revenues for a long time, and that fueled essentially like overexpansion. So when you sold at the peak, that would have been probably what 2021, 2022, somewhere around there. Like they had this gaming division and they massively overexpanded into like Poland, other bits of Europe, India, South America, and it went really badly wrong. And particularly as we're coming, like the pandemic was really great for e-commerce stocks. The pandemic ended, like a lot of e-commerce stocks kind of reset back to their original like pre-pandemic profitability, and C was caught with its pants down. And at the same time as that, like its main gaming property, which is a game called Free Fire, was starting to lose users. So when I pitched C Limited for Seven Investing, I recall saying like ignore Garena, it's just irrelevant. It's no longer the case, like it's come back into relevance. So today, in the most recent reporting, on an annual basis for C Limited, e-commerce was about $12 billion a year revenues. Financial services was about $2.3 billion, and now the gaming side of things is just under $2 billion. So it's not immaterial, and it's very high margin revenue, and it is profitable. Like it's fueling, because in fact, like it's C Limited's biggest segment, e-commerce, is actually like loss making still, because they're investing to try and like build their logistics, make it more robust in their home markets. So that gaming revenue is still helpful for them to kind of fuel the engine, but they can't rely on that forever. And I think they recognize that. And so they're trying to build a sustainable competitive advantage, which is in like the Amazon model, having like an unassailably efficient and effective and fast, reliable e-commerce kind of capability with real logistics and delivery in the main markets where they are the leader. If they can really like get their claws in and establish themselves and like maintain that leadership edge, that's what makes them resilient to like an Amazon coming in and trying to like battle with them.
Well, when I think of Mercado Libre, I just think of a thoroughly dominant company that now has scale and it has capital and it has trust and all these partnerships and it's local and it's so I don't quite understand the thinking in C Limited saying, "Oh, we're gonna try to compete with these guys there too." How are they even
Yeah.
succeeding a little?
I think they did that over expansion. I think they got to like having a somewhat profitable model in Brazil. So unless they've withdrawn from the majority of their non-Southeast Asia markets, they literally just pulled out of a bunch of markets and got kicked out of some others. Brazil, they didn't get thrown out of, and they've been able to operate that at, I haven't got the detailed numbers in front of me, but at somewhat of a profit, or at least like not massively loss making. So I guess they've just kind of hung on to like the remnant in that overexpansion that they think they could continue to scale out profitably. But you're right, like it doesn't quite fit with the Southeast Asia idea. Maybe this is their CEO, Forrest Lee, kind of hanging on to something outside of his home turf, just in case it's like a springboard. If they do want to re expand again in a more kind of controlled and managed way into the rest of Latin America, they've kind of got a base to do that, at least if they've maintained the presence in Brazil.
Okay, call me a skeptic uh, in terms of that being a good strategy because at the end of the day, if Mercado is the dominant gorilla, then they'll be able to compete on price eventually due to all of the synergies. Then what advantage does an outsider have, even if now it's good enough? So I don't know,
Yeah.
but I don't know what I don't know about that.
No, it's totally fair. And like it's reflected in the valuation. You're buying C at a materially cheaper valuation than Mercado Libre today. So I think they're both good holds, like good long-term holdings. If I had to pick a winner, it would be Mercado Libre. But as an investor's, like you don't need to pick the winner. You can back every horse if you really like a theme or a segment or a particular investing idea.
Yeah, that's the whole idea of buckets. This is like your little mini e-commerce bucket, especially if you
not so many. It's pretty material. Yeah,
cool.
All right. Well, so my Mercado Libre investment's going pretty well. You took out a short on Quantum Computing Inc. Do you want to tell us how that's going?
Yeah, I closed first of all, I closed all my puts. Majority of them were in my real money portfolio. In King of the Jungle, I bought one put for $10 and that went to zero. So I lost 10 bananas on that, unfortunately. Here's the lesson here. At one point, I was up a couple $100, but I decided not to close it because remember, my thesis is that this is as borderline to a fraudulent company as you can get. And
this was remind us, like this was the quantum computing company that previously sold beverages or something.
Correct. This company goes way back, and you could tell that the operators behind it are into massive share dilution and changes in. It's like they know how to incorporate, and then they go to where the hottest next thing is. And it's weird because they changed their name to quantum computing. So when quantum computing everyone became excited about that, and they're just buying all the quantum stocks. This is the best name, one of the best names in the business, Quantum Computing Inc., right? But when you look at their finances, they make zero money, and it just like, it absolutely reeks of like shell fraud, bad stuff, even though they do have legitimate quantum physicists on the team. That doesn't translate to $1 billion valuation. So I was betting that it's going to go to zero. If you look at the chart, if our editors could put up the quantum computing chart that I made using FinChat, I bought the puts near the all-time high, and I sold them. I timed it pretty well and sold it near the local low. And after all told, I'm still down $55 as a whole. And that's for two reasons. One,
let's just explain like the picture a little bit. So at the very peak of the valuation, you were like, this is BS. This is overvalued. I'm buying puts, which means you're betting the stock is going to go down because you're buying the right to sell the stock at some point in the future.
Correct. I bought the right to sell the stock at $10, and I think I bought several, one at 10, one at 5, and a bunch at $2.5 per share. Because thesis was it's going to at least 1. If it's a fraud, it was going to go to 1 or below 1. So I bought near the peak, and I sold most of those puts when it was fell all the way down to about $5. So I was right. I was completely right in the direction. I was right pretty clearly in terms of time. But I also bought a whole bunch of puts that were $2.50, and it never went below the $4 price, and I never sold those. So I lost the entire value of those contracts, which was $310. So that's why the net in total is like it's almost, nothing, right? But the lesson here is that when I was buying these, the premiums option makers know when the stock is really volatile. So they were expensive to buy, and that's why the profit wasn't a lot more than I'm showing on paper. So it's one of those things where I was right. My reasons were right-ish, but because it never fully turned out to be a fraud yet, I couldn't cash out maximum value for the puts, and that's why I wasn't really, it was in a big money-making venture. The better question for you, Badger, is now that the stock is up to, what is it today? It's now trading at $9.30, which makes it it's back to being a several billion-dollar company. Its earnings are coming out, I think, in 2 days. And, at some point, I think the music is going to stop. I just don't know if, given the market, obviously this is one of these market manipulated companies where enough of the shadow players get to do with the price whatever they want kind of situations.
Allegedly.
Allegedly.
Sure.
That means we don't really know if I'm right, when the fraud will catch up to the company's actual finances and it goes bankrupt. So I'm tempted to play the lottery again, but I don't have a sense of timing anymore.
Yeah, fair enough. It's not for me, but for some reason, I'm finding myself shorting like really solid, robust companies like American Tower rather than this dumb shit. Should probably be doing it your way. Yeah. I suppose if you think back to like where we are in the cycle, like if tariff chaos is behind us, and if we could be going back into like boom times, and like the zeitgeist right now, like the Wall Street bets crowd, like they go crazy over stocks like this. So if we go back into boom time, like everything's going to go up, whether it's a real co or a shit co.
Right, and that's the lesson to, I suppose, the majority of investors here. Were I to buy more puts on this thing, it would be clearly labeled, it's the circus fund, because you could be right, you could be wrong, and the market will still do what it wants to do in the short term. The only way I would consider this even like a quasi investment instrument is if I could buy puts that were long dated, certainly past January, so maybe at least a year out, where the company actually does go bankrupt or has to like dilute investors so severely that it breaks the algos somehow.
Yeah. Well, I guess you could look at like their burn rate, like how much money they're spending to stay afloat every quarter, and you could look at how much money they have, and like you can just, that's a pretty easy calculation to work out when they need to raise more money. So that's if the market like goes, like that dilution's pretty ugly.
Yeah, there is like maybe I'm overstating it. It's fraudulent in all the ways we've talked about, but because they have legit quantum physicists working there and it's a newly emerging industry, I can't know for sure whether all of a sudden they could pull a rabbit out of their hat and say, we have actually come up with some new contract with a legit player and it's something that nobody knows and it's not in the open. It just seems like the probabilities of that happening are so small.
You got to go find those guys. If there's like a handful of those legit quantum physicists, you got to go find them on LinkedIn and like set up some sort of like price alert. Like if any of those guys suddenly flag that they're looking for work, like immediately,
right,
that's your like trigger. Yeah,
that'd be a good tell for sure.
Yeah. All right. Well, here this way lies danger if you play with options, kids, and sometimes it works out and sometimes it doesn't. Sometimes, like Krzysztof just did, you get it right, you have the right plan, your timing is good, but you get hosed anyway. So
yeah, well, I didn't get hosed. I didn't get hosed. I could have cashed out on the positive.
Right. Yeah. No, well played, to be honest. Like you top ticked it and you bottom ticked it with your like buying and selling your put. I guess like the downside was maybe you were a bit too aggressive in terms of what the downside could have been, and like a bunch of your options didn't. They just expired as opposed to printing.
Yeah, I mean, if you look at that line from where I bought to where I sold, I mean, it's kind of straight down. And once you have that kind of momentum, you think, okay, yeah, the story's over, and then somehow the market, players reversed it. So.
And it hit our docket because it was up like 40% just like a few days ago. So, like, God knows, who knows what's going on? Maybe they hired another quantum physicist.
I'll keep you updated if I go in on the puts again, but I'll have to do more research before doing that.
Okay. Well, should we have a bit of a similar debate, but around an actual legit company who does actually do some quantum computing stuff as well? But I'm talking about Alphabet/Google, because I just broke one of my golden immutable rules. Rules are there to be broken. At least I bent it. My rule has been never add new money to a position to take yourself above 6%. If I want to have like a 10% position, it's got to grow there from 6%. But Alphabet took a ding last week on what I think is immaterial news, and I just couldn't resist taking the opportunity because my position had drifted below a 6% allocation. So I'm like, I'm going to add. So I've added myself up to 7.5%. I like this company, but you are not such a fan. So tell me why.
It's not that I'm not a fan. Obviously, world's best business ever, maybe. It's that, especially in the context that you're talking about it, making it one of your biggest positions. I just, in this moment, I honestly can't really be sure if, because of its size, if they're too slow in reacting to the AI threat, the whole innovator's dilemma problem, which any listener just knows inside out, I'm sure,
Yep.
that they're being too slow or not proactive enough to counter the potential disruption of their core revenue generating ad business. And I it's not that I don't know. It's not that I don't believe them. It's not that I don't think they're a great business. It's not that, but when the whole world is just, the moment we're in, when you have a capitalized competitor to the tune of OpenAI, and these things are, updating themselves so quickly, and how can you, in this moment, Badger, feel confident that something won't, I don't know, not break, but jeopardize their main cash cow? So even if all their other bets do work, and you can't, yeah.
I'm high conviction in this because I see really clearly how they are going to win the AI race.
Tell me.
Like I pay for a bunch of these tools. I pay for Gemini. I pay for ChatGPT. I even used Manus on a free trial last week. Like I'm always playing with these tools. And I think as a sort of simplistic, I'm using them mostly to do like investment research and understand the world better and explore ideas and manage my own nutrition and stuff. I'm like the best models from Google are as good or better than the best models from everybody else. But the models themselves are a commodity, really. Like someone will get slightly better than the other, and then someone else will catch up. Like no one's going to get an unassailable lead in this space. Even Google added their own like video VO2 model, like video generation model a few weeks ago. Like they're at parity. But the bearishness around this is, I think the idea is right, but the bearishness is misplaced because the bearishness says, like the blue links, like, you go to Google and you say, Google, whatever, some company, something you want to buy. Like I bought something the other day. I bought this water bottle and like I want to find the best one. So I like Google it. And then Google earns its money because certain people will buy those keywords knowing my demographics, and then they earn a bit of money because they essentially bought my search. And that's like the main engine of their revenues for a long time. And the bearishness is, well, AI is going to come along, and instead of Googling it, you're just going to ask your AI about this thing. And it might even, in the world of agentic AI, which we're moving into right now, it might even do the research for you and go and buy the thing on your behalf, and you never have to do any research and you never see any adverts. And so that whole advert revenue goes away. I don't think that's what's going to happen. I might ask my AI to do a thing. Well, if the advert is buried in the AI's response, or maybe the AI actually, I say, buy me the best water bottle that fits my SodaStream machine. And if the AI chooses to buy one that got, had like advertising behind it, i.e. rather the company selling the thing paid Google to make me buy this one rather than their competitor's one, that is such a high value thing to have happened for the advertiser. Like CPMs, cost per milli, that's how you pay for adverts. Like you pay for like 1,000 eyeballs seeing your thing. Well, the CPM rate, like the amount of money that an advertiser pays, will go through the roof when it's highly targeted, almost like not just give me like 10 options, 10 links. It's like buy this one for these reasons. So advertisers will pay more for this like intelligent, embedded, contextual adverts within a user's results or the kind of outcome they get. And yeah, there's going to be some nuance, because if I ask my Gemini and it to buy me like a water bottle and it buys me like a shitty water bottle because those guys paid the most, that's going to jeopardize my user experience. I might not use Gemini next time. Like there's some nuance for companies like, well, all of them, OpenAI and Alphabet and everybody, to kind of navigate to maximize their ad revenues, but at the same time give like a good quality result. The reason why I think Alphabet are going to win here, though, is they've got distribution with Android. So, like, Android has been the dominant mobile operating system for some time, and it's just massively dominant now. If we look at most recent data, something like 71% of all handsets worldwide are Android handsets, and so it's like 3 out of 4, and then 1 out of 4 is Apple, and there's like other stuff on the fringes, but virtually everything is Android. And Gemini is now packaged with Android, and not in the best way. It's like a separate experience. It's not really embedded, but we've got Google I/O, the developer conference, just like next week in 10 days time, I think. And I'm entirely expecting to see some big announcements around Android 16, which is like the latest OS that's going to be coming out of beta. Like people are using it now. I'm expecting to see like Gemini baked into Android 16 at a much deeper level, where like Gemini already sits in seven of Alphabet. Alphabet has 2 billion user products. So Android, Chrome, Gmail, Maps, the Play Store, Search, and YouTube. Gemini is already in all 7 of those 2 billion user products. And I think the system become much more pervasive, add more value, and then pivot from this like selling impressions and selling clicks to actually embedding advertising revenue into those experiences. Do you want me to bring it to life with a real example?
Sure.
Like Maps, right? It's one of their 2 billion user products. Even most iPhone users use Apple Maps. Sorry, they use like Google Maps because it's just a better product, right? But if I say, okay, I'm gonna like find me the nearest pizza in Maps, well, like there's an advertising opportunity, not just like the old style where I'll say, okay, here's like 10 pizza stores with the reviews, and maybe the one I chose to go to, Google earns a lot of info on. Like if they embedded Gemini into that, it'd be like, Luke, do you like this kind of pizza? And there's one that's like a little bit further away, but we know you're going to like this because you're focusing on your nutrition, and like a bunch, because we know you're talking about nutrition because like, you did some searches around that a few weeks ago, and I know you're talking to me about like your macros intake, and you can get like a healthier pizza if you go to this place. And by the way, they're offering this discount right now, and I know you're like a discount hound. So like if you bring this stuff together intelligently, people are going to make decisions which ideally are win-win. Like better for me, I get a better quality, healthier pizza, and better for that pizza store. And then they paid Google for that like high intent outcome, and then Google earn a lot more than them being like number one on like a list of 10 somewhat arbitrary pizza options.
That's pretty convincing. It reminds me a little bit of the moment we had with Meta a couple years ago, where it just seemed like it was over bloated, and of course the fact that they're a world-class company kind of and so deeply embedded in everything already, that turned out to, if you invested in them at that point, it was a really profitable trade. So I hope this works out for you. Because I was actually considering this trade myself, and then I couldn't, despite everything you just said, I couldn't discount in the end. What if the whole paradigm just shifts so massively to something other? but then it has to run on something like you're saying. So it's almost like I want to say this is Google's to lose, and they would have to fumble it. I know the all-in guys were critiquing Google, like how could you not have Gemini in front of more people embedding it? But that's a problem that they really should solve way better than they have. And that's what maybe that conference you're talking about, if they still are fumbling it after that point, then I'd be a little more worried. But for now, I'll almost say you convinced me to be less afraid. Uneasy, but less afraid.
Yeah, good. Like, I wouldn't be buying shorts on this one.
Okay.
You want to take us into your Safari stock for this week, which sounds very interesting.
Sure. So my Safari stock is ticker symbol ALAB, Astera Labs. Recently bought an opening share in King of the Jungle after they reported really terrific earnings, and then the stock was down after hours, and I was like, wait, this just, it was all valuation, algorithmic trading. But I liked the financials so well, and all the tailwinds that I was like, I got to have me an opening share. So Astera Labs, forgive me because there's so many acronyms in this thing, and there are also so many technical things I think are way besides the point. It's really, they're the guys that provide the connective tissue and making memory run a little bit better in terms of connecting all the AI data center stuffs and chips to one another. So think of all the AI tailwinds. There's data centers, and then there's servers, and then there's chips inside the servers, and everything needs to run basically as fast as possible with as much flexibility as possible. And these guys make different kinds of tools to optimize all of those interconnective things. They have products they call Aries, Leo, Scorpio, and Taurus. All of that is just nomenclature. But here's the one thing I want investors to know is that you have things like GPUs that NVIDIA makes that are, you could call general chips. You buy them off the shelf, right? And they work for general purposes. But then you have something called ASICs, which are application-specific integrated circuits. Those you have to customize for very narrow use cases. And what's great about Astera Labs is that they serve products across both dimensions, basically making all of AI their TAM, really. And after the earnings report, revenue was up 144% over the year. So that's how I reverse engineer. I always reverse engineer. If they're growing that fast, I don't really need to know how these little gadgets do and what the switch does here and what the specific name is there. Go ahead and read up on it. I did, but it's kind of besides the point. They are the shovels and picks and shovels to all basically all the data centers that are evolving, and it's a bottleneck situation where all these companies trying to build things out and get the most juice out of their already expensive equipment. How are they going to squeeze the last bit of juice out of all the capex? They're going to buy from Astera Labs to make the inner plumbing more efficient. And so, I mean, are you, as I ramble on about this, are you even interested in something like PIC-Ease or CXL, or does it even matter to you, the code names for some of these internal gadgets, or is it enough to say, look how fast this revenue is growing? We're at the beginning of generational build out. We're waiting for essentially, I guess one more thing. We're waiting for NVIDIA to say, NVIDIA is one of their main customers. They have customer concentration risk, so there's something, but if NVIDIA is one of your customers, like NVIDIA is not going to go anywhere. It seems like, to me, it's enough to say, look, They're growing like mad. They have 70%, over 70% margins. They have fancy toys that all the AI players are buying. And it's just a valuation question. And I went for it because the valuation got better with the latest earnings report.
Great stuff. Can't say I still understand what they really do, but to maybe field your question, do you have to really understand the nuts and bolts of like what a techie company like this does? Probably don't. Like to some extent, you want to understand the market and is it growing, and are the customers wanting to use more and more of them? You can get a lens into a lot of those things just by looking at the numbers. So yeah, that is certainly a way to play. Like, you don't have, what's my TLDR here, you don't have to be like a super domain expert to be a successful investor in a particular sector.
Right. In fact, that often goes against you. This is very counterintuitive, but I've made bad investments because I was convinced on the specific tech, and then all the other things just didn't work out the way I thought I did. So in order to prep for this episode, I actually learned a whole lot of this stuff, right? And then then all of a sudden it's time to report on it. And I'm like, God, even saying things like CXL and PC, lowercase e, is like, what's the point? When all you really need to know is that AI, ML models need increasing speed and power. And in order to make all this stuff work, you need better connective tissue, and these guys make the better connective tissue. And maybe investment-wise, the only real question is the valuation justified? That'll only be justified if they continue to see sharp and or accelerated growth. And what we know is that NVIDIA is probably going to have a bad first quarter because their Blackwell chips were sort of delayed. But then when they finally come out in quarter 2, quarter 3, Astera Labs is going to book a whole bunch of revenue to connect all those chips to the other chips. And so the ramp is just basically getting going. And we're at the beginning of this generational shift. So this past report basically proved that this company is not a one-time blip in the sky, kind of like Air Systems was. Because if for Seven Investing, I was really big on that company because I said, the future of electric vehicles depends on having better semiconductors, and these guys, provide the testing systems for all these chips. But then all of a sudden you have this sort of, slowdown in electric vehicle projections and all kinds of, the tsunami basically didn't tsunami, whereas we can't sit here with a straight face and say that AI tsunami, there's going to be a hiccup there. So let me give a summary cap for maybe another little short. Astera Labs reduce bottlenecks in AI training workloads. They improve server reliability and scale. They enable faster connections between components like CPUs, GPUs, scaling memory. They save power and cost using copper instead of fiber. And they prepare infrastructure for that connectivity between CPUs and GPUs, which is a very big deal for the future of AI computing.
Thank you for doing that research for our Safari, and nice to know you bought one share. Even though it's immaterial, that's how you stick stuff on your watch list. That's how you do it.
Correct.
All right. Very good. We got through our long docket, and we managed to battle with me being an idiot and pressing the wrong button, stopping our recording, and your slightly dubious Italian upload. Yeah.
Yeah, not bad.
We are hoping next week to be joined by Alex Vidyuk, who is a venture capitalist in Singapore who's got many years of running successful VC funds around space technology. So if you're interested in space and what's happening in the private markets and how that might help public market investors in space, which I am definitely one of, then tune in next week for an exciting conversation.
And in the meantime, anytime Badger and Monkey talk about any stock or any investing headwind, tailwind, or even complicated stuff like my bonanza with Chainlink rewards and all that, sometimes, it is complicated and you might have a question or follow-up for us. So head over to patreon.com/Wall Street Wildlife, where in our community forums, that's where we banter and are happy to answer questions in a way that is more satisfying than we did during recording.
And if you enjoyed Paul's question last week, where we went pretty deep on where he is in life as an investor and how his own portfolio is shaped and how we might manage it if we are investors, then drop us in like an audio or a video question. Hit us up on the Patreon ideally, but if not, you're not there, then catch us on the X's and then let us know you want to submit an audio or video question and we'll tell you how to do that.
Are you ready to be a beast of an investor?
Your journey starts here.
Woo!